Why do wire transfers sometimes need an intermediary bank? Imagine sending money across the world and wondering how it gets from your bank to someone else's account in another country. It might seem simple, but there's more happening behind the scenes. When you initiate a wire transfer, especially internationally, your bank might not be able to send funds directly to the recipient's bank. That's where intermediary banks come into play. Many banks, especially smaller or regional ones, don't have direct relationships with every bank worldwide. They lack what's called a correspondent banking relationship, which is like having a trusted partner in another country. Without this direct link, they need a middleman to help move the money along. Think of the intermediary bank as a reliable courier that knows how to navigate the complex web of international banking networks. International wire transfers often involve different currencies and financial systems. Intermediary banks help with currency conversions when needed, making sure the right amount in the correct currency reaches the recipient. They also use global messaging systems like the Society for Worldwide Interbank Financial Telecommunication, or SWIFT, to send secure instructions across borders. Smaller banks might not have direct access to SWIFT, so they depend on intermediary banks to handle this part. Another reason for using an intermediary is compliance. International laws requiring banks to check transactions for money laundering or sanctions. Intermediary banks perform these checks to ensure the transfer meets all legal requirements. This process helps avoid delays or legal issues for both the sender and the receiver. Using an intermediary bank also speeds up the process. These banks have established networks and infrastructure that allow them to execute cross-border transfers more quickly and securely. This reduces the chances of errors or lost funds during transit. When you send an international wire transfer from your bank or credit union, it may pass through one or more intermediary banks before reaching the final destination. Each of these banks might charge a fee, which can add to the total cost of your transfer. The time it takes can also vary, often from 1 to 5 business days, depending on the banks involved and the countries. In short, intermediary banks are essential for making international wire transfers smooth and reliable. They bridge the gap between banks that don't have direct relationships, handle currency exchanges, ensure legal compliance, and speed up the process. This way, your money gets where it needs to go safely and efficiently, even across continents.